again, March 13th. March 15th is a major corporate deadline. Mm-hmm. April 15th is a big individual deadline that I think most of your listeners are familiar with. And when March 13th of 2020 happened and the world just stopped, it was like, whoa, wait, what happens? Do we still need to file returns? But then now we got PPP announced, and I've never seen anything like it.
Hey, Kristen, welcome to the show.
Hey, Shannon, thanks for having me.
Of course. So for our listeners, just do a quick little introduction about yourself so they can get to know you.
Sure. My name is Kristen Engeron. I'm president of Legacy Consultants. We do tax planning and outsourced CFO work for clients all over the country. And we typically specialize in small businesses that have under $10 million in revenue.
Love it. And one of the topics we're going to talk about today, very specifically, is the employee retention tax credit, which is like one of our favorite subjects. And I say that very sarcastically because it's super boring.
It's Charlie Brown's teacher.
Exactly. What and I'm like, if you're already listening to this episode, you're like, what the hell is that? What are they going to talk about? That I don't even touch this stuff, the employee retention tax credit, very often. So that's why I wanted to bring in someone who has a bit more experience with it. And Kristen, how would you describe, very simply, what is the employee retention tax credit and what does it actually give a small business owner?
Well, let's start with a little bit of history first. The Employee Retention Tax Credit, or ERTC, as the acronym most people use for it, came about during the CARES Act of 20 when COVID hit. And it was a way for the government to give a credit back to employers on a portion of their employment taxes and employment health insurance that they paid for employees. So ideally, this was supposed to give companies a way to get cash during the pandemic to help them with low revenues. And the logjam happened to be with the IRS and processing all these returns. But that is the fundamental basis of it, is to give businesses a refund of the employment taxes that they've already paid.
Okay. And so for the small business owners listening, right? How do they know if they qualify for this credit? Is it they have to have employees, number one, right? Yes. And then how do they actually qualify?
So basically there's a lot of noise out there about employee retention tax credits. And a lot of people, there are some clearinghouses and firms that have said it's super difficult and there's over 200 pages. It's 10 to 12 pages of guidance that the IRS has issued, not even rulings or notices. And pretty much it's pretty general. But the main measure has been if you were subject to a government shutdown, if you were subject to a partial shutdown, and then there's the last test, which basically looks at your gross revenue every quarter compared to that same revenue of 2019. We have gone very conservative in using that last test, which basically says if you had a reduction in revenue compared to that same quarter in 19, you qualify. It's as simple as that.
So does it matter why you had a reduction in revenue? Like how would someone know that they qualify, right? Is it just comparing the quarterly income statements year over year?
Yes. So, and again, it's just comparing that same. So you would look at your QuickBooks or your Xero or whatever financial software you have. You'd run your P&L, run your income statement for end of first quarter 20, end of first quarter 2021, and compare it to end of first quarter of 19. And if you had in order to qualify, there's two different years that you can qualify for. You can qualify for 2020. And you can qualify for 2021. And there's two different tests for each one of those years. So since 2020, I remember March 13th, 2020 was when that was the last day of school for my kindergartner. And so that was when everybody got shut down and lockdowns happened and so whatnot. And so your gross receipts had to have gone down by more than 50% if you're looking to qualify for one of those quarters in 20. They had to go down by 20% or more if you're looking to qualify for if you're looking to qualify for first, second, or third quarter of 2021.
Okay. When you say qualify for one of those quarters, you mean if I qualify for, let's say, first quarter 2021, it means that that's the quarter for which I will get back some of my payroll taxes, right?
Correct. Yes.
Okay.
So you will. So if you meet that gross, so let's say you look at your income statement or you get your accountant or CPA to tell you whether or not you meet this test, then yes, you qualify. Then what happens is there's a secondary issue that needs to happen, which most of your business owners that are listening to this podcast probably receive PPP money. And so everybody, again, PPP was great. It saved a big part of the economy, especially restaurants. And initially in 2020, the CARES Act that was passed in 2020 said that if you got PPP money, you could not qualify for this credit.
Right.
The act that came out in 21 changed that and said, no. If you got PPP, you qualify. If you got PPP, you can also qualify for this employee retention tax credit. The caveat is whatever wages you used to get PPP forgiveness, you can't use those same wages in your calculation to get that employee retention tax credit. So you can't double dip, which if you think about it from a common sense standpoint, that seems fair. That's a level playing field.
Right. But it's also super complicated. So for those listening, they're like, oh my God, now I have to do all this crazy math and like back out certain wages and just like, oh my God, this sounds like a headache. Here's one other question though, too, for those listening who are just sole owners who don't have W-2 employees, but maybe they're a sole S Corp owner. Does their own salary count?
So if you're Schedule C and you're the only employee, you don't qualify for employee retention tax credits. You have to have W-2 payroll. There is a lot of gray area to see if you're if you're the only employee of an S Corp and you pay yourself a W-2, chances are you do not qualify because there's an ownership test that has to pass too. But again, there's also some gray areas. So I would say it just really depends on your situation. Which is why I don't recommend that anybody try to do this alone. It is complicated. It's again trying to make a very complicated subject easy to understand for the average business owner. I think most of your audience can understand the concept of, oh, this is a tax credit I can qualify for and get portion of my employer paid taxes that I already paid for back. I think everybody in your audience can understand that.
Right.
But the other part of it is when you're trying to calculate it, it's a per employee credit. So you can get up to $10,000 per employee per quarter for every quarter that you qualify. But again, you need to make sure that, you unless you're very knowledgeable in how the calculation needs to be done, I would not recommend business owners try to do this for themselves or try to do it without advice from their accountant, CPA, or somebody that does this on a fairly regular basis, because the IRS is going hardcore after people who have abused the system with PPP, with EIDL loans, and that was the economic injury disaster loan programs through the SBA, as well as people that are applying for ERTCs and they've received them and they shouldn't have received them. And it's not your friendly, and I'm saying that in jest, your friendly IRS agent auditor that shows up at the doorstep. It's the CID. It's their criminal investigation division that shows up in pairs with guns. And they are taking this very, very seriously. But again, I don't want to scare your audience. But again, if we go very conservative in the approach to using the gross receipts test and using that test only, if you qualify using that, well, then as long as we don't double dip using your PPP wages for forgiveness, you'll be fine.
Right. It's all in how you do it, right? And how you approach it. You mentioned like not doing it without help, but here's the thing: with I love to say that public sector, insufficiencies lead to private sector industry creation, which is
Yeah.
when the public sector doesn't offer much guidance or leaves something up for interpretation or adds a new element into lawmaking, guess what? We've created an entire new industry. So what I mean by this, guys, is that as a result of the ERTC, we now have ERTC houses that are specifically businesses to only do ERTC related services. And I want your take on this, Kristen. Do we approach this like, I mean, there's an advantage to having someone who just does this all day, every day, but there's also, they popped up out of nowhere. And, how does someone know who to work with to do this the right way?
Well, that's a tough question and an easy question at the same time. And I sound like an economist, ironically. But again, you want to make sure if it sounds, and I go back to common sense, right? If you've got somebody that's telling you, if it sounds too good to be true, it just is, right? And this is not an area where you want to play around with. So, I would, there are a lot of aggressive houses that, like you said, that have popped up. There's an industry that's been created out of COVID government relief, be it PPP, EIDL, or employee retention tax credits, and they are hardcore selling, but they're also offering, because they know there's a lot of money that is at the table for small businesses, and they're advertising to take 15 to 35% of whatever you're supposed to get back. But they're also not telling you, oh, by the way, if you have a payroll company, the payroll company is going to charge you $500 to $1,000 to amend your quarterly employment return, your 941. Plus, you have to amend your corporate return if you're an S corp or a C corp or a partnership. So you have to factor in those costs as well. And the question I would ask somebody who's trying to pitch you employee retention ERTC services is, I would ask them, what makes you think that I qualify if you haven't seen any of my numbers, right?
Mm-hmm.
If they answer that question with, well, were you shut down? Well, yeah, everybody was shut down. Well, then you qualify. Immediately, that should be a red flag. That absolutely should be a red flag, because that is the furthest in the gray area that you could possibly play. And again, the IRS hasn't done anything to help because they haven't offered a lot of guidance. So they've, in essence, almost created the monster by kind of having this be the wild, wild west. But yeah. Again, if I'm one of your listeners, and if somebody's trying to pitch you these services, that should be a red flag. But the second red flag would also be if they're just saying, if you were subject to this, we can get you this. And if they don't, and a third red flag is if they say, yes, you were subject to a shutdown, and they don't even ask you about when you qualified for PPP. Did you qualify for round 2, round 3? If they're not specifically asking you questions about PPP, I would third strike, you're out. I would hang up the phone as quick as you got on it.
So, and it goes the other way though, too, because there are also a lot of accountants who, and I kind of sympathize with this, that this all came out, PPP, EIDL, ERTC, alphabet soup, right? All these different, yeah. So all this stuff came out, and all the accountants were like, my job is stressful enough. I don't want to do any of this stuff, because as accountants, hear us out on this one. As accountants, we are getting the information the same time as you. We didn't get any backstage pass. We didn't get any pre-release content. We didn't get any education. We were learning alongside of you this entire time. And what we had to do was learn rapidly. Think about like all running in one lane. Like we had to sprint ahead of you so that we could help you get to the finish line. And it was tough. And for a lot of accountants, they were just like, I'm too tired. I don't want to learn this. I don't want to offer this service. And unfortunately, clients suffered because they would go to their accountant and say, hey, I think I qualify for this ERTC thing. And I was actually seeing a lot of accountants going, don't worry about that. And just kind of taking a lazy route. So on the flip side, though, you also have to look at, you have to look out for yourself too. And I would get multiple opinions would be my advice, because I think that there's both. This is why it's so tough being a small business owner and a listener to this podcast is like, Shannon, this is such conflicting advice. And I'm like, I know. How do you know who's lying to you? You don't. How do you know who's taking the lazy approach? You don't. You really have to go through the steps to establish a relationship with someone you can trust to tell you what they think about this type of stuff. Kristen, what's your take on that too? Have you seen that with like the quote unquote lazy approach?
Yeah, and again, in defense of all accountants and CPAs and those of us who, like you said, learned as we went and were
Yeah.
working 18, 20-hour days, and we were shut down. We were
Mm-hmm.
working remotely. I fortunately was just in my office, so I just shut the door and, whatnot with a kindergartner. So,
Mm.
not, so again, everybody has lives as well. But I have seen a lot of accountants in large firms, regional firms, 2 and 3 practitioner firms pass on doing the ERTC because they are swamped. They are underwater. They stopped everything. I mean, again, March 13th, March 15th is a major corporate deadline.
Mm-hmm.
April 15th
Yes.
is a big individual deadline that I think most of your listeners are familiar with. And when
Yeah.
March 13th of 2020 happened and the world just stopped, it was like, whoa, wait, what happens? Do we still need to file returns? But then now we got PPP announced, and I've never seen anything like it. And every CPA and accountant I've talked to is still treading water. They are
Mm.
still trying to catch up on 20 returns, on 21 returns. And they've, because they have maybe helped some clients with ERTC or EIDL and PPP loans and all the alphabet soup COVID that's supposed to help business owners. But at the same time, it was like, here you go. We know you're drowning, but we're going to throw you this little bitty life raft and you're drowning in the middle of the Atlantic Ocean. But I think there are a lot of accountants and CPAs that have just chosen to say, and I don't think it's a lazy approach. I think it is they don't have any more bandwidth.
I
They don't have
agree.
any more
Yeah.
time. And I think it's very hard and I think most professionals, especially CPAs and accountants, want to take care of their clients. But
Yeah.
there's only so much that they can do they have 24 hours in a day, just like you and I. So just like your business owners that are listening to the podcast. So, so I don't think I would ask for business owners to not say it as lazy, because I think a lot of business owners think, oh, they're just filing my return, not understanding everything that goes on in order to make sure that you are in compliance, that the CID doesn't show up on your doorstep.
Yeah, exactly. I think there's a mix of both because I definitely see the overwhelm, and I think that's the predominant factor. But I also do see a lot of accountants who are just like, I'm tired and I don't want to do this. And that's okay.
They're
That's
burned
their
out.
prerogative.
They're
And
they're they're burned out.
they're burnt out. That's really it's the burnt out version of
Yeah.
it. Um and I don't blame them because it's been we've been through it in the last couple of years. But I also think that when it comes to looking for someone to help you with this type of stuff, you have to, like I tell business owners, you have to take ownership. You have to be your advocate because you know accountants can choose to or to not to offer any service they want, right? Like they don't have to do everything for you. And you made a good point where you said, well, they're filing my return. Yeah, they're filing your return, but that doesn't mean they're going to do the ERTC. That doesn't mean they're going to find every single opportunity to save you money unless you're doing some type of tax planning work with them and that you're meeting year round with them. We talk about that all the time on the show. Like, don't be fooled that your accountant who's filling out your paperwork isn't necessarily saving you any money.
Oh, look, I fundamentally changed our practice 4 years ago now. To specifically, it was kind of like that Jerry Maguire moment, right? Where it's
Mm-hmm.
like, less clients, less money, right?
Mm-hmm.
Because we're not offering value, like just doing returns. And that's not where we made our money in the first place. And the few returns, we maybe do 45 personal corporate returns a year, but we do it as a value add to our clients. Whereas the traditional CPA accounting firm does more returns than CFO advisory work, right?
Right.
And so for us, it's been my employees have a quality of life. I have a quality of life. My clients get value out of it. And so that's why we've been able to help clients, and even clients who have just come to us to just do the ERTC work. And again, your listeners don't know me from Adam except for being on this podcast. But if people, if they feel like they want to reach out or whatever and just have a conversation, we're happy to do that, because again, we're not trying to nickel and dime anybody. We don't even offer services by the hour. That mentality just doesn't suit us at all. We're in the business of making sure small business exists for the long haul, because if small business doesn't, we all know the statistic that, what is it? 80 to 90% of the United States economy is fueled by small business. We know that. And if we don't help small businesses stay alive, then none of us remotely have jobs or lives that we can do. And that permeates every sector of the economy, and it touches every person in the economy, whether or not they realize that or not.
Oh, I totally agree. And it's so important to think of that bigger picture and to really think about how can we serve the small business owner. And this is a theme that, for those of you listening to the show, we talk about a lot. Like every CPA I've had on here, at no coincidence, is someone I've invited on because they also share this message. Because I think that there is like an echo through the industry right now going through that's like that you have to bill by the hour, or that, you basically just do tax returns. And there's this assumption of what CPAs do. And I think that there's a paradigm shift happening where people are starting to realize that we have to bill based on value, not volume. And I would rather go deep instead of wide, meaning I'd rather help my client end to end with an issue and get to know them and their whole situation and solve those problems than scratch the surface of hundreds of clients. And that's just how I think a lot of us are operating now. And this is one example of that with the ERTC, is like, this is another added service where, for example, if I was doing CFO at the time, and I still am doing CFO, and we're going to talk about like, can we still do the ERTC right now? Because a lot of people think it's not still available. But if we were to do that right now, I'm like, that's something I would do for my CFO clients, like probably included, because that's what I'm here for, is when these things pop up, that we jump up and say, hey, do you qualify? Like, we would do a qualification test for everyone immediately. Yep. And see, okay, can we take advantage of this? And that's the kind of partner I think you want to have, is someone who's looking out for you like that.
Yep. And again, the qualification test can be done. I mean, we can do that calculation in less than 2 minutes. I mean, as long as if you got the software, if you've got updated financials.
Well, that's the big if you have bookkeeping. This is what we talk about bookkeeping, guys.
Yes. And so that is, and again, assuming that is the case, it should be fairly easy to ascertain. The work comes in because it's a per employee credit. We literally have to go through payroll by payroll and to say this 2-week payroll applies. Or we have some clients that actually pay weekly because they're in the manufacturing space. So go through a weekly payroll for 2 years for a client. Like, that's a lot of time and effort. And so, but if it results, one of our clients got, a little over $1 million in employee retention tax credits because of that.
Wow.
But it was that attention to detail. And that was, now again, what I will say is, and to your point, I'll circle back on that to all your listeners. If you get no other message out of this, it is this: it is not too late. Just because you might hear stuff on the news or you haven't heard as much of it in the financial press as we did in the early parts of 21, you can still apply for these credits for 20 and 21. The deadline to apply for any of the 2020 credits is April 15th of 2024. The deadline to apply for any of the 21 tax credits is April 15th of 2025. So you have time. What I will tell you, though, is do not wait till the last minute, because legislation can change, as we all know. And the other thing is that it is taking the IRS, I would say a conservative estimate should be 9 to 12 months to get these refunds. And so again, if you factor in that, if you're needing cash now, it's not a quick way to get cash at all, but it's an asset you can put on your books. Once you get the letter back from the IRS saying, yes, we've accepted this. Yes, you qualify. We're going to start processing it. It's an asset you can absolutely put on your books. And then if you need it to go to a bank to borrow, you could absolutely borrow against it. So not that we're advocating for that, but again, it's about how do you put this massive benefit and massive asset to your advantage if you're in a cash crunch now, or, and again, it's not instantaneous. It takes a while. So you have to be willing to have some bandwidth of it takes a while to put together. And then you have to actually get the IRS to send you a letter that says, hey, yes, we've accepted it. That whole process, once the IRS, or to get the IRS to send you a letter saying it's accepted and yes, you're entitled to it, in addition to getting the refund, is, like I said, can be 12, maybe as long as 15 months. It just depends. But that's why you also want to have somebody that's not going to just file it for you, but that's somebody that's following up, that's pressing through the bureaucracy to follow up to make sure, hey, look, are we checking on this every 30 days to make sure the ball's getting moved? And if it's not, how do we move it forward for the client?
I'll just say an advocate is invaluable. If you have somebody willing to advocate for you, that is invaluable right now, especially with the IRS. And, we were just talking about like the IRS, they're so delayed. Everything is so behind. And we were just talking on another episode about how, there's all this bad press they're getting about the IRS getting a big budget. And I'm like, I'm thrilled. Maybe they'll answer the phone and respond to the letters now and like give people their refunds. Hopefully that's what they're trying to accomplish, right? They're trying to catch up and they're trying to dig themselves out of a hole. But until they do, over the next 10 or so years, and they upgrade their technology from 1990 fax machines, this is what we've got. And this is what we're working around. So we have to do everything in our power to self-advocate and to make sure that things are going through.
And I think that's an excellent point that you make, especially for your listeners to understand that. And again, if you're not doing it, if you're not in it every day, if this isn't your industry, you don't know. But there is no email. You email the IRS. They will not email you. It doesn't matter if you have a power of attorney, or they will not email you. Everything is done over fax. And I mean, 2 years ago, I had an IRS agent refuse to send me a document for a client that was going through an audit because we had e-faxes. And they were like, well, you have to sign off on saying that you acknowledge that your e-fax may not be secure. When I knew I guarantee you my IT is way more up to date than theirs, but literally refused to send me because I did not have a hard line fax machine in the office. That was 2 years ago. That has not changed. They don't even have 2D barcoding scanning abilities. I mean, everybody from the AICPA to the Tax Advocate Service has testified in front of Congress that you got to do something, and throwing bodies at it, qualified bodies.
I'll take bodies to start and then qualified. Yeah.
And then qualified bodies. I mean, they're facing the same labor issues that we all are. It doesn't matter if it's the mechanic, the mechanic shop owner, or it's the restaurant owner, or the accountant that is trying to find qualified staff. It's a labor shortage. And so the IRS is not going to be immune from that. But that is very much, I hope your listeners get that point from you and me as well, as that I don't think they understand it's literally like Flintstones technology. Like, I think Fred Flintstone in the car probably has, him running in his rock car has better technology than the IRS.
Yeah, this is hilarious because it's Flintstones technology in Jetson's time. Yeah. And isn't that hilarious? George Jetson was just born. I don't know if you saw that. So like when his Wikipedia, I think he was born in 2022, guys. So like we are in the Jetsons lifetime and we are living with Flintstones technology, which is hilarious. Yeah. So ERTC, it's not, so points being, it's not too late. You can absolutely qualify. You need to find someone to help you advocate and get that credit back if you think you do qualify. Crucial element, though, is good bookkeeping, because you need to make sure that you can back it up with those numbers. What other advice do you have, Kristen, for those who are curious about the ERTC, and how can they find out more from you on how you can help them?
So like I said, we're in the business for helping small business owners any way we can. So we're not looking to replace your CPA, your accountant. If you think you qualify for the ERTC, we're happy to work with you. Just give us a call. You can call us directly at our office, which is area code 985-360-3460. You can actually email me directly at Kristen, Kristen, at Legacy Consultants, and that's with an S, LLC.com. I know it's a long domain email address. I've had it for 11 years. I'm stuck. I'm not changing. I'm going to be old and set my ways right now on that one. But you can feel free to, like I said, call, shoot us an email. We're happy to have a free 45-minute consultation with you, just to talk with you. If you need, if shoot us over your financials, like you can we don't need to know your company's name or anything. If you just want to send us gross revenues, we can do a quick and dirty for you in about 5 minutes and tell you whether or not you qualify or not. And then, like I said, if you decided to engage us to actually work with you if you qualify to do the ERTC, then we do it on a case-by-case basis as far as what the fee is, because we want to look and see how much it's going to cost to amend your tax return, which we will not do. Whatever CPA account you're working for, that's work that they can do if they want it. If you want us to do it, we can do it too. But again, like I said, we don't make a ton of money off of that. So again, but we're here to help people. And for the listeners of your show, if you call in or you email us, and if you heard about us on this podcast, you'll receive a 10% discount of whatever fee that we quote you to help you with whatever service you'd like. So as a reward for being great listeners.
Well, we really appreciate that, Kristen, and giving our listeners that opportunity. So we'll make sure all of that's in the show notes for you. So if you want to reach out to Kristen, do feel free. And, let us know if you learned something new in today's episode, or if Kristen helped you unlock an actual credit. Let us know. Shout us out on Instagram. Let us know that you're getting something out of today's episode, and make sure you tag me at Shannon K. Weinstein. Kristen, thank you so much for being on the show today. Thank you for coming and sharing your knowledge with everyone listening.
Thank you for having me. Appreciate it. It's been fun.